Hey, what's going on, everybody? Happy Friday. Finally, the trading session on the week. It's ending, and we had another very interesting session today for the entire market. And I want to point out on something that happened, which ultimately will lead us to something that we already know, but kind of, acting like, well, this is actually getting there. And this is actually something that has the potential of pushing the share price of AMC very, very higher. So today we had an economic indicator coming from the job market, and the economists were looking at a gain on 150,000 jobs added to the economy. And as a matter of fact, as you can read here, we had almost a gain of 467,000 jobs. At some point, they corrected this number because they miscalculated. All right, we're talking about now a 610,000 jobs versus just 150,000. Man, this is a huge parabolic gain. What does it mean, really? Well, the Federal Reserve, as I always tell you guys, main job is to actually look at how strong the labor market is, because the labor market being strong is really a sign that the economic growth will gonna be sustained as the month goes. All right. Now that they are kind of also really wanna how to increase interest rate, how to fight inflation without breaking the economy or breaking the stock market. That's a very tough place to be for the Fed now. But these high jobs really confirms the fact that, hey, employers, the labor market is really strong, as Jerome Powell really wanted to be sure 100%, I will say even 120% before actually making sure they can increase rates. So this signifies that the labor market is stronger than we expected. So what it really means is that the Fed is going to actually push the brake, not push the brake, push the gas pump. Why? Because they had what they needed. They had the confirmation they needed in order to be as aggressive as possible. And on the tail of this, and even before this, some banks on Wall Street were already calling on not 4 rates hikes, not 5, but between 6 and 8. That is pretty much 1 interest rate increase for the rest of the year, if this will be starting in March. That is a huge catalyst for the market. Not that much for the short sellers in AMC, but definitely good for AMC. Why? Because, as I mentioned many times, in order to short sell a stock, you need to borrow the shares. And these short sellers went into margin, they went into debt in order to short sell to the point where AMC is sitting at $15 now, where in reality it should be sitting at, add 2 zeros to that, like seriously. So even though the share price has been dipping lately for the last 3 or 4 months, it doesn't change the fact that the next coming months, especially if the Federal Reserve is about to be as aggressive as some people in the market expect it to be, man, it's going to be a disaster. It's going to be chaotic for the short sellers, because if you were maintaining a debt at 0.01%, every single month that increases to a quarter of basic points, like 0.25% for 8 months consecutively till the end of the year. It's going to be a disaster. Where are you going to actually find the money to pay that huge debt, especially if brokerage firms, liquidity providers are saying that, hey, we need to increase these margin requirements because money is not cheap anymore. So with Evergrande not being what it used to be, because these guys were using bonds from Evergrande to use as collateral. Folks, I don't know how to say it otherwise for you to understand how big of a deal this is, especially if you consider what the NASDAQ has been doing lately. Today it gained and was mainly one of the gainers based on earnings on Amazon, Snapchat, and who else? There was another one, Bill.com. But in reality, they are bleeding. So just a matter of time, folks. Just a matter of time. It will come here. It is due for a bounce. It's going to come.